Wow, holy smokers, folks. This has to be the most fear-driven market I've ever seen. What I want to show you guys here today is I want to show you some of this fear in the market, okay? And then I'm going to take you through some charts a little later in this video, and we're actually going to look at something I was looking at late last night, which I was trying to look at some of these stock prices versus where they were at in January of 2020, so prior to Rona. And we're going to look at that, so I think that's going to be really interesting for you guys to see that. But nonetheless, hope you guys enjoy this. As always, make sure to subscribe to the channel. Yeah, market's down big today. I think we all expected that off those Facebook earnings. There was just no way the Nasdaq wasn't going to be down huge today, and sure enough, it's going to be probably a 2.5% to 3% move roughly for the Nasdaq here today. But what is shocking? Okay, this is nothing short of shocking. Is look at Amazon stock here today. Okay, so if you didn't know, Amazon's reporting earnings after the bell. So here in a few hours from now. Amazon is down 7% roughly, 7% down for Amazon. You know, I don't think I've ever seen a market this fear-driven in my life, okay? You know, we've got mega cap stocks trading like they're penny stocks. Facebook down 25% today. It was a $900 billion company yesterday, right? We saw the move in PayPal. We saw the move in Netflix. We got the, mega cap stocks trading like they're penny stocks. And you've got Amazon. And this stock is down 7%. That's basically hedge funds. That's not retail, by the way. If you think that's retail investors making this move, no, okay? That's hedge funds. What they're basically saying is we are so scared that Amazon stock's going to tank 10, 20% or whatever on these earnings that we would rather sell now. Even if this stock is down 5, 6, 7%, we would rather sell now than hold that stock through these earnings. And even if Amazon is to go up on these earnings, we don't really care because we're that scared right now that we want out of this thing. Because think about it this way, right? Who's to say Amazon can't go up on earnings? Who says they can't go, be up 5%, 10%, 15% on their earnings? What if they come out and have some great numbers? But this is essentially hedge funds and money managers in general, high net worth individuals saying, no, I don't care. I don't care if I'd rather get out of this stock and basically not have to risk my money going down 20% tomorrow than essentially the stock goes up 20% tomorrow. I'd rather be on the sideline in that situation. And that's such a different mentality than we had at this time last year when it was, if anything, a stock was up 7% going into earnings, right? Because it was like, oh, it's up 7%, but we're going to get another 20% or 10% move after earnings as well. Now people are just like, no, I want no piece of it. And, I can kind of understand it a little bit because you've seen the move in Netflix was a 20+% move down. You saw the move in PayPal 20+% down. You see the move in Meta today down 25% plus, right? And people are just like, nah, I'm good. And Amazon trades at a much higher PE, right? We know Google, Apple, those ones held pretty strong, but those ones are also not very high PE companies. Amazon's a higher PE and forward PE company than those sorts of companies, right? And so people just said, I'm out of this stock. That is fear on fear on fear. You want to see another fear-driven stock? Look at Square stock. They haven't even reported earnings yet, okay? This company hasn't even reported their earnings yet. They should in, the next few weeks. Let's put it that way, the next 3 or 4 weeks. When it comes to Square, okay, this stock is selling off another 10% here today because people are so scared about the Square numbers after seeing PayPal's numbers and how that stock fell that people are just like, I want out of Square any way possible. It hits a new 52-week low pretty much today. And people are just like, nah, I'm good. This one might go to $80, $90 a share. I'd rather just sell out at 102 today, even if it's down 10% and even if it's fallen 50-something% in the past couple months. I mean, look at this stock, guys. I mean, this stock's down 60, 70% in the past 3 months. 3 months. It's an extraordinary fall this stock has been on. And the fear is driving this market, and it is in full control of this market right now, and there's nothing anybody can do about it right now. Retail investors, hedge funds, there's nothing anybody can do about it, because if big funds want to sell, they're going to push every single one of these stocks down, and that's exactly what you see happening. They want out of this market so fast, it's not even funny. And this stock made a huge move down yesterday on those PayPal earnings, and then here today, another 10% roughly. Where's the stock going to be by the time it reports earnings? That's a big question, right? Eventually, what's going to happen to a lot of these large caps, and we're probably not quite to that level yet, but we're getting close to that. what's going to end up happening, I want to explain this for a moment, then we'll get back into all this good stuff, okay? What's going to end up happening is you're going to end up starting to run out of sellers in some of these stocks. You're not there yet. You're not there yet with PayPal and Square and Amazon and Facebook and some of these others. Meta, I should start calling it Meta. But you're going to get to that stage, kind of like we've seen in the small caps, where we had that capitulation last week, and a lot of these small caps hit new all-time lows, 52-week lows. And what we've seen since then is, even though the market's kind of floundered and been downtrending or not doing much, is a lot of the small caps have been holding up decent. And the reason being is you just start running out of dang sellers in a lot of those stocks. You're always going to have traders coming in, coming out, those sorts of things. But in terms of those massive move downs, it gets hard when you just get almost every single, let's call it weak hand or person that's a little fearful out of those stocks. You start having no selling pressure, and then volume starts drying up, and you start to get into this place where you either got, traders trading around the stock, or you got buyers coming in. But in terms of folks that are, swings or even longs, a lot of them just kind of exit. So that will end up happening to Square, PayPal, Meta, and all those other companies, right? Amazon. We're just probably not quite there, but I can tell you, eventually you get to that point where there's no selling pressure left on these babies, okay? Now, if we look at there's only 3 stocks on my entire watch list, right, that are green today. Three, literally. And 2 of those stocks have already reported earnings, okay? Good old Tesla, Tesla in the hood. And so I think some folks are looking at those 2 stocks and like, okay, they already reported earnings, so the bad news is already behind them. So they're going ahead and, those stocks are having an outperformance day. When you have the NASDAQ down almost 3% and you have Tesla up just barely today, and you have the hood having a great day, that's just people saying, hey, these companies have already reported. I feel like we can buy them now. And, that's a totally different scene than what you're seeing in the stocks that haven't reported earnings, like Square, like Amazon, and some of the others, right? Where people are just scared out of their minds in those stocks right now, right? As far as me personally, as far as the way I'm looking at it, I bought PayPal here today. I bought another 25 shares of PayPal or something like that. But even myself, it's hard for me to buy heavy right now, just for the mere fact I'm looking at it, I'm like, well, Tattoo Chef still has to report. Honest still has to report, and Corsair Gaming still has to report, which are 3 big positions for me. What if those stocks fall? I have to have some capital around for those drops, right? If they're going to drop, and I don't know if they're going to or not. So even for me, it's hard to go out there, with both hands and just buy right now, because I'm looking at it, I'm like, well, I got to have some capital around just in case the Chef falls to $10 or Honest falls to $5 or Corsair falls to 15 or whatever, right? So that's kind of the way I'm even looking at it right now. And that puts, that puts the market in a tough position right now. The fear and greed index is a lie, okay? The fear and greed index says it's only fear right now in the market, but a lot of what that's basing off of is volatility in the overall market. I can tell you we're in extreme fear right now. In my 14 years of doing this, I don't know if I've ever seen, mega cap stocks like an Amazon sell off 7% prior to earnings just for the fear, down to a 52-week low, just for the fear that it could go down a bunch more in earnings. That's a whole other level of extreme fear, when you have people just selling stocks and making these short-term decisions to sell out of great companies just because they might miss their earnings, they might have bad guidance, and the stock might go down 10, 15, 20%. Those decisions are very short-term in nature decisions, right? And that's what people are making. And when we're in that sort of market, I call it an extreme fear market, okay? Now, I told you guys I was going to show you some charts I was looking at last night and trying to see where some of these stocks were at prior to Rona and versus where those stocks are at now. So if we go back to January 2020, which was before all the fear started and things like that, and then, obviously we fell off a cliff starting in February. If we look at FB, Meta, that was a stock that was $222 a share. Here today, after hours yesterday, it was trading at $249 late last night when I took these charts, right? But here today, it was like $241 a share or something like that. We're getting close to where Meta was prior to Rona. Now, think about how much progress that company has made in the last 2 years. Think about how many new people have used their platforms in the last 2 years. Think about how much better their balance sheet might be and how much better their business is positioned for the long term. Think about all the progress that company's made in the past 2 years, and here we are with a share price essentially, right? That's trading pretty darn close to where we were trading at prior to Rona. That's pretty darn extraordinary when you think about something like that, right? Look at PayPal. By the way, this was 128. Here today, it's 125. Okay. we're getting pretty darn close to PayPal. Remember, PayPal also owns Venmo. This is a stock I just started buying here. And this is a stock that was 116 January 12th, 2020, prior to Rona, right? And here today, it's $125 a share. That, to me, says this stock is a steal deal and a half, right? Think about how many new customers PayPal and Venmo have acquired over the past 2 years. Think about how much progress this company's made over the past 2 years. Think about how much better the balance sheet's in than it was 2 years ago. And everything across the board for this company, they're much more relevant than they were 2 years ago. The P is much lower than it was 2 years ago. Forward P is much lower than it was 2 years ago. And here we are with this stock, now getting close to where it was prior to Rona, man. That's nothing short of extraordinary. And these are just kind of the sorts of moves you're seeing in this market. And these are the type of things that are starting to signal to me that, I don't want to say we're at a bottom, but, you're getting pretty darn close when you see stuff like this, okay? The ARK ETF today is trading in the 60s. Prior to Rona, ARK ETF, which is run by Cathie Wood, obviously, right? 53. So not quite there on ARK, but think about ARK's biggest position, which is Tesla. And think about what Tesla stock has done since January 12th of 2020. That stock's gone insane. So the question is, if ARK didn't own Tesla, where would the ARK fund be at today, right? I think that's a really, really fair question. And so I'm looking at that one and I'm like, geez, that one's getting, if we continue on with this rough NASDAQ, if Amazon misses, right? If Amazon misses and that stock goes down 10, 15, 20%, I think ARK will end up probably likely, because that would pull down the whole NASDAQ and give a super sour taste in the whole market's mouth, right? If that was to happen, I think ARK's probably going back down to where it was prior to Rona, which is, nothing short of extraordinary. And we know a lot of those stocks that obviously Cathie Wood holds, which, by the way, if you want to see Cathie Wood's holdings on an updated daily, like a daily basis, put on your desktop CathieWoodStocks.com. That's my website that tracks Cathie Wood's top 25 stocks on a daily basis, essentially. And that's going to show you like what she's in, what she's not in. And if we think about a lot of those stocks, they've been destroyed in the past year. Teladoc, Zoom, which we'll look at Teladoc in just a moment. Teladoc, Zoom, all those sorts of stocks. Oh my gosh, okay. Palantir is one. Just about everything she pretty much holds outside of Tesla has been destroyed. And Tesla is significantly off its 52-week high as well. Look at Teladoc, guys. Look at this. This is amazing, okay? Teladoc is below where this stock was in January of 2020. January 12, 2020, before the real Rona fear started, this stock was $95 a share. $95 a share. And here today, it's in the mid to low 70s. The mid to low 70s. That's crazy. Think about, how much more relevant this company is than what it was 2 years ago. Think about, this company's revenue profile now versus where it was 2 years ago. But none of that matters in a sort of market. Fundamentals start kind of getting thrown out, right? And people just start looking at it from the perspective of everything negative. Well, what's going wrong for this stock? And this was a stock that had a blow off top of $308 a share. $308 a share a little over a year ago, right? A year and about a month ago or so, or a week ago. That's extraordinary. And now the stock's trading in the low to mid 70s. Guys, that's wow. Wow is all I got to say. The Russell's been right around 2K, 1900 level. Prior to Rona, January 12th of 2020, the Russell was at 1700. Or right around 1700 roughly, okay? And so, and by the way, the Russell had been kind of going through a tough time for, since kind of right around mid 2018, and it dropped off a cliff essentially going into basically 2019, then started to come back, and then obviously fell off a cliff again. And here we are with the Russell, getting to some incredible levels, and you think about how many of those Russell stocks are in a much better position today than they were actually at that time. And how much progress has happened for a lot of those companies' business models underlying, right? And, here we are. If all of a sudden you get a NASDAQ to pull down 10%, that could easily pull down the Russell 10, 15%. And the next thing you know, you're in a Russell range that's basically where we were prior to Rona. It's just nothing short of extraordinary. And keep in mind, most of these companies are in a much better capital position than they were essentially prior to Rona, which is quite interesting how that ended up working out, right? When I look at this market, I'm going to look at what fund managers are doing and the decision making that's going on in this market, and so much of this selling out of stocks that have great long-term futures. Don't make your decisions based on fear. That's all I can tell you. That's always a bad decision, to make your decisions based upon fear rather than make your decisions based upon, if you think that's a good decision for you over the next 3-5 years. And if you think, just trying to get out of Amazon, let's say, let me sell out of Amazon because I might be able to buy it back cheaper in 3 months from now or 6 months from now or 9 months from now, I can tell you that's a losing strategy over the long term. And maybe you could be right, or maybe you could be wrong. But all I know is that's a losing strategy over the long term, because most of the time you're not going to get it right, and you're going to sell out of great companies that you love for the long term based upon a fear decision. And that should be something that never, never, ever happens. Okay, so don't make your decisions based upon fear. It's a great time to take stock market investing very, very serious. We have a massive deal coming up for the Private Stock Group Financial Fortress program. It's the Valentine's Stocks and Lovers sale. If you want to check that out, check out pinned comment down there to get on the wait list. Much love as always, and have a great day.